Soros has taught me that when you have tremendous conviction on a trade, you have to go for the jugular. It takes courage to be a pig. It takes courage to ride a profit with huge leverage. I believe that good investors are successful not because of their IQ, but because they have an investing discipline. But what is more discipline than a machine? A well-researched machine can make many average investors redundant, leaving behind only the really good human investors with exceptional intuition and skill. The first thing I heard when I got in the business, not from my mentor, was, bulls make money, bears make money, and pigs get slaughtered. I'm here to tell you I was a pig, and I strongly believe the only way to make long-term returns in our business that are superior is by being a pig. If you're extremely confident, taking a loss doesn't bother you. What a company's been earning doesn't mean anything. What you have to look at is what people think it's going to earn. If you can see something in 2 years is going to be entirely different than the conventional wisdom, that's how you make money. The few times that Soros has ever criticized me was when I was really right on a market and didn't maximize the opportunity. Earnings don't move the overall market, it's the Federal Reserve Board. Focus on the central banks and focus on the movement of liquidity. Most people in the market are looking for earnings, and conventional measures it's liquidity that moves markets. Soros is the best loss taker I've ever seen. He doesn't care whether he wins or loses on a trade. If a trade doesn't work, he's confident enough about his ability to win on other trades that he can easily walk away from the position. You can be far more aggressive when you're making good profits. I like putting all my eggs in one basket and then watching the basket very carefully. I don't really like hedging. To me, if something needs to be hedged, you shouldn't have a position in it. Every serious deflation I've looked at is preceded by an asset bubble, and then it bursts. Bitcoin is like anything else, it's worth what people are willing to pay for it. I've always loved to play games, and face it, investing is one big game. You need to be decisive, open-minded, flexible, and competitive. I think diversification and all the stuff they're teaching at business school today is probably the most misguided concept everywhere. The way to build long-term returns is through preservation of capital and home runs. I focused my analysis on seeking to identify the factors that were strongly correlated to a stock's price movement as opposed to looking at all the fundamentals. Frankly, even today many analysts still don't know what makes their particular stocks go up and down. The key to money management. It's making a lot of money when you're right and minimizing it when you're wrong. I learned that you could be right on a market and still end up losing if you use excessive leverage.